In today's fast-paced society, banks are now challenged to expand from their foundations into the current technological trends that customers are demanding. 77% of Americans have a smartphone, and the average person visits a bank branch just once or twice a year. Community banks, which have always focused on providing excellent customer service, are now forced to rethink the customer banking experience. One such bank, located in the heart of Central Kentucky, has expanded its mission of providing excellent customer service by implementing many of the latest banking technologies. Central Bank finds its roots in the horse capital of the world. The first branch was opened in downtown Lexington, Kentucky in 1938, and since then it has expanded throughout the Bluegrass region and northern Kentucky.
A couple things are happening in the banking industry right now. We're seeing a lot of consolidation, and it's not that the banking industry in total is shrinking, it's just that the number of banks that we have are shrinking, and there's many forces that play into that. One of them is technology. Providing technology services is kind of expensive, so you have to reach a certain level to even have the capacity to offer some of the services that are being requested by consumers today. So just speed of transactions is important today. Consumers are wanting information, particularly about their financial condition and the financial services, quicker. They want them through their smartphones. So a lot of things are playing in right now of why fintech and offering financial services through technology is becoming so critical to the banking industry these days.
Community banks must invest wisely in new technologies that continue to transform the customer banking experience. Central Bank has become a leader among its peers and competitive with national banks.
Then they can continue to bank with us because they're banking electronically. Often the funds are deposited to their account electronically. They pay their bills electronically. They have a debit card and they have mobile banking. So they can bank literally anywhere in the world. We call that banking locally and serving globally.
Even small businesses are taking advantage of e-banking technologies offered by Central Bank. One such business is Fahi, a local mortgage lending company.
We went with a community bank when we did our conversion as opposed to a large national bank because of the customer service.
I would say we're probably as good in technology as any bank in this country.
With the dynamic and enhanced sophistication of threat actors and of the malicious codes that's being thrown at our banks, it's a 24/7 job. There's no downtime, there's no time to relax. The cybersecurity scorecard is something that we track and present to the board to show the number of attempts and what we block and what types of traffic we have to completely negate from our network to keep us safe. And we present that on a monthly basis so they understand the threat and what we're doing from a control perspective.
Central Bank has become a market leader among its peer banks by listening to the needs of their customers and judiciously investing in the best technology to meet those needs. Continuing this trend of improving the customer banking experience by implementing emerging technologies is essential for Central Bank to remain competitive. Expanding digital communication and recruiting millennial talent who understand emerging technologies will give Central Bank an edge as they move into the future of community banking.
Heartland Bank is a community bank that was founded in 1911 in Croton, Ohio. They expanded into Columbus and now have over 14 different branches in the area. They pride themselves on customer service, being heavily involved in the community, and supporting local businesses and business owners.
So we saw the economic disaster coming. We didn't expand. We kind of became really efficient. We had a lot of capital reserves, and then when the financial disaster occurred, we were the only one lending money. We were prepared. Our balance sheet wasn't in trouble. We didn't have to kick customers to the curb. We had a lot of clients that we had to recapitalize, but we had the capital to do that. So that's kind of where it started, and that gave us a really, really good reputation out in the marketplace that we were the bank to do business with. Even if our customers were in trouble, we try to take care of them at every turn. Right now we've seen all of our portfolios accelerating at double-digit numbers. And some are doubling and tripling in size because they're brand new. So like the agriculture business for us, the big focus on that and then the risk management that we put in place has allowed that portfolio to, we established the first year, it more than doubled the second year, this year to probably grow by 50%.
We've recently spoken to the IT director and heard about technologies in the industry and how it affects. Training has to partner with all of those teams to understand the onboarding of new technologies and how we can train our associates to actively and effectively use the technologies, and how do we also then communicate those through our associates to our customer base.
I feel like any banking business, community banking included, needs technology to survive. We're going through and changing the way we do a lot of things internally.
Okay.
Every manual process that we have going on, we are innovating and making sure that we're becoming more efficient and productive with things, and that always comes with technology.
Okay.
The most recent thing we did was we switched our loan application system, or loan documentation system, to a new product which automates the entire process from application to signature and document closing.
Okay.
So we took something that was like 4 or 5 steps and involved 4 or 5 different people and processes and pieces of paper and paper during each step, and made it all electronic. So we're that much faster at closing documents now for loans, and we involve less people and we get it done faster, which is great for the customer.
With Heartland's continued persistence to improve technology and customer relations, it's no wonder they've experienced such wholesome growth.
Welcome to the city of New Orleans, a place with great culture, art, and Cajun cuisine. New Orleans has also served as home to Gulf Coast Bank and Trust. Founded in 1990, a group of investors were led by CEO Guy Williams with a vision to build a bank that blends financial technology with the time-tested values of customer service. GCB outperforms peers in terms of return on equity, which is driven by a strong return on assets, but peers operate with slightly less leverage. GCB narrowly outperforms in terms of profit margin, but operates with almost twice the level of asset utilization. By leveraging fintech, they grow portfolio assets at a faster rate than physical premises.
Pre-Katrina, just people didn't realize how vulnerable we were. Everyone, again, your cell towers went down, all of that stuff went down, 504 went down. And you can talk to the communications companies, to AT&T, how would they handle that? Well, they go down. Those 504 won't go down again in a Katrina. So everything's changed since then. You may say whatever you want about us pre-Katrina, but since then we haven't sat around. People now come and look at us as to how to do it. We just won't go down. That's the difference.
So that's key after disaster, is having access to your funds. So the technologies now, I think, help people quicker than they did after Katrina. The accessibility, I think, is a big issue. Like we talked about the remote deposit capture potential you can do now, and the mobile banking apps and all that. That wasn't there after Katrina.
Team Southeastern developed a 22-question survey to learn more about customers' opinions on fintech and banking, and found that customers want dual service, technology and proximity.
We see that shift to more technology, which is great. People love it until they want to talk to somebody. On one hand, we've come a very long way, but on the other hand, we recognize that banking is still about relationships. Our customers, albeit don't come into the bank every day or every week, they still come in and they still want to have that interaction.
The reality of it is we develop a lot of software in-house. That's kind of weird for a bank of size, but we know what we want, and a lot of vendors don't build what we want. So this came out of pure necessity.
We developed a model to test the hypothesis that the bank's adoption of fintech counteracts the negative impact of weather-related disruptions. We developed 6 ordinary least squares regression models to further analyze the relationship among financial technology and disruptions in Southeast Louisiana, and the net impact on GCB. Of all the subcomponents, charge-offs to total loans show strongest significance with the model, indicating the effectiveness of the early warning system to significantly reduce charge-offs. Further assets past due 30 to 89 days, provision for loan loss, Non-interest expense, net gain, loss on loans and leases, showed some relationship with the model. The following subcomponents of non-interest income also showed a relationship which supports the effectiveness of fintech-based services to generate revenues, deposit service charges, and other non-interest income.
This video is intended to discuss how Citizens Bank uses its existing and emerging financial technology to tailor services to its unique community of customers. Through reasoned inquiry and helpful participation from key stakeholders, we gained valuable insights about the nature and operation of Citizens Bank and the technologies it employs. Citizens Bank is chartered in Kansas City, Missouri, but straddles both the metro and surrounding rural markets. Consequently, they consider themselves fast followers of financial technology trends.
The primary reason that the bank moved from Chillicothe to Kansas City was growth opportunities, specifically around the loan portfolio. And with the move to Kansas City, part of that is you have access to bankers that have broad-based experience. We hired banking staff that have worked at large banks that dealt with larger credits, more complex credits. And again, with the move to Kansas City, you're able to bring that staff on board. Again, these companies expect sophisticated cash management software process, and that's where we had the biggest upgrade with our move to Kansas City.
We're known as a core processor. So a core processing system is that heart and soul accounting system for a bank that processes loans, deposits, and general ledger. But then we surround the core with pretty much anything else you need to run that bank. So mobile banking, internet banking, payment processing, voice response systems, teller systems, all the technology you need to run the bank that surround the core. We view that as our mission every day to make sure we help the bank remain relevant. That's a term we use a lot. Bankers, you need to make sure you're remaining relevant to the consumer, because if you're not, they're going to drift away to all these other competitors.
We don't have the ability to have a lot of the services, a lot of the pieces custom made for us. And so we use what's out there from the industry and modify it only when justified to do so.
So where we tend to focus on differentiating ourselves is not as much with technology as it is with the service that we provide with that technology. It's one thing to be able to provide online account opening, let's say, but it's another thing to provide extra service once that customer's on board. How do you contact that customer? How do you get them to interact with your bank more effectively? How do you get them to use additional service?
31 compliance reviews every year. We do 27 internal audits. We have, depending on the year, either 3 or 4 specialized IT audits that we do. And we do approximately 18 COSO-based operational risk assessments a year.
Fulton Bank is headquartered in Lancaster, Pennsylvania. Technology is implemented through many mediums at Fulton, such as marketing, cybersecurity, strategy implementation, and risk management. With the needs of consumers growing in the competitive industry that is banking, it is essential that Fulton utilize technology to continue its success.
Technology generally allows us to serve customers when and where they want to, interact with us. So technology has really, across the spectrum, allowed us to better serve our local customers and understand our local markets. By having a better understanding, you're able to better serve them.
How do we leverage the interactions between those platforms in order to get data to do the data analytics, to drive the customer research, to drive the quality metrics, and to understand how our businesses are running?
Cybersecurity is a growing threat. There's no doubt it's had an impact on us. We've integrated security into everything we do. Security, even 8 or 10 years ago, used to be sort of what I would call a bolt-on afterthought. And now it really needs to be integrated into the fabric of everything that we do. Over 20 individual systems that are used specifically for monitoring and managing security. We have a security operations center where we have people who on and by the way, this team of people didn't even exist, say, 4 years ago, where their job is to monitor what's going on out in the the world of security. Cybersecurity is interesting. It's one area where banks really cooperate. It's not a competitive issue. It behooves banks to cooperate with each other. So our security officer is a member of a team called FSISAC, which is a consortium of banks who work together.
We use a variety of third-party technology to manage our overall risk process, as well as some in-house developed databases and capabilities.
The number of ways that we do that, I'll classify it down to two. There's really kind of two basic reasons we will deploy technology. One is to build and grow the business, and another might be to maintain compliance or to comply with regulatory requirements. So
digital technology has allowed us to have immeasurably more data than we've ever had before. So we can measure everything from just on our general website. Who's coming, when are they coming, when they come, what are they doing, how long are they staying on pages. I mean, there's just a ton of information just in evaluating our website data. And then when we think about our digital marketing efforts, there's lots of metrics and things that we measure, like cost per click, cost per conversion.